banks are, they're quite established. Henri, Mastercard, I gather you have a program called Fintech Express, and it's very tricky for like a large organization like an incumbent bank to be able to innovate and push for that innovation. How does Fintech Express enable fintech innovation, and what exactly is it?
Yeah, it's a good question. I mean, we've been working with banks, as I mentioned, for 40, 50 years. But when fintechs, the new kids on the block, came around the corner, we realized that these were very different animals than traditional banks, and that we as a company really had to adapt ourselves. When you launch a product with a bank, it takes months, literally, to actually start a project and finish it, go to market. Fintechs are very different. Their standards are different, their processes are different, and the time to market needs of fintechs, as Jonathan was explaining, is a lot more fast, is a lot more quick. Therefore, we needed to question ourselves in terms of what we were offering and how we were interacting with our partners. We investigated all of our processes, whether it's franchise, legal, compliance, but also risk, which is very different when you talk to a bank or with a fintech. And we've adapted those and we bundled that into the Fintech Express program, which was launched in 2020 and is really designed to facilitate fintech's launch and expansion. It's tailor-made solutions. It boosts the expansions of fintechs and startups, but also very importantly, we essentially work to create alliances and partnerships. So we have preferred vendors that we have selected, that we are used to work with. And, a BaaS vendor such as Vodeno is a clear example of that. They actually went through the program. And when a fintech comes to us, we can quickly interconnect them, which means that, our promise is that you can go from concept to market in a matter of days and not in a matter of months. And that's really what Fintech Express is about. It's that time to market acceleration. A lot of fintechs have gone through the program since it was launched. And we believe it's one of the reasons why fintechs prefer working with Mastercard.
I've got to say, it's not just fintechs; it's all the neobanks as well. My wallet here is almost of all of. I'm not sure my cards, but I bank with everyone. So
wow!
I would say the majority. Yeah, the majority.
That's impressive.
Mastercard. Oh, there's a Visa there. Mastercard. You do seem the preferred rails for
you
cards.
You might want to consider to digitalize them, because it seems to be quite heavy to have it in the wallet. Such a bag.
I'm glad you said that. I actually have. It's actually all combined on Curve. Another Mastercard. Oh, no.
Yes. Indeed.
Which also is almost a bit of a banking as a service and embedded finance model as well. The last thing I want to bring up, and I like this kind of as a thought process, is we are seeing a lot of different brands, a lot of different industries, a lot of different organizations coming to the likes of you, Kim, at Aion Bank for partnerships, but the timing around this seems to be something that is often overlooked. So when would you say is the right time for an organization to start to think about how BaaS can help their business? I mean, going back 50 years, even kind of pre-card network, it's almost like, when do you think you'll accept cards at Woolworths or whatever? Well, you're going to have to 50 years later. So looking at this kind of BaaS model, when should organizations start to think about this to help their business?
But first of all, for the players that are still hesitant, banking as a service is there to stay. There's tons of research, and I will quote one, for instance, Juniper Research, estimating the banking as a service market in 2026 worth $138 billion compared to last year value of $43 billion. So clearly a booming business. And we've done research, like also asking people the questions like when they would use embedded finance services, the age-wise, youngsters or elderly people and so on. And we've seen that actually youngsters are convinced already. If you look to the age category between 18 years and 24 years old, 51%, so over half of them replies that they feel fine and they trust large brands in offering financial services. While you can imagine for older people, maybe they say, oh, no, financial services, it must come from my bank. But the youngsters, they are convinced already. They don't make a point out of it. They are cool to get financial services from Facebook or an Amazon or whatever. So youngsters are convinced already, which is a big proof that it's there to stay. Yeah? So brands that are still like envisaging, should I embed financial services in my service offering? Yes or no? Well, it's happening already, and people are using it already. It gives, as I explained earlier, a lot of benefits to the players that are embedding it. So first of all, it increases their revenues because it's a smoother experience for the customers. So a higher probability to make the sale and to have higher revenue. But also it offers a large brand insight in data. If I use my card elsewhere, this large brand can have insight in my spending, of course with my consent, in order to have a look at the data, and then has the ability to offer tailor-made services to myself, and again increasing the stickiness and the loyalty to the large brands. And the most important point for fintechs or large retailers when they envisage embedding financial services is that they need to look for the right partner, because as we've discussed before, and as Jonathan has mentioned as well, the key pitfall for a fintech is to kind of bet on everything and start doing everything, right? So what is the key for success is that they can stay focused. As Jonathan said, Tricount's core business is offering the Tricount app to people in order to share expenses and to settle the bill among them. So they came to us and to Mastercard. We are the banking experts. We are the ones offering the reach to Tricount. So all of a sudden, all those fintechs, they don't need to be the financial expert. They don't need to have expertise in banking. They don't even need expertise in offering this technology, because we deliver it as a service for them. So that's very important. It's there. It's booming. It brings you added value if you embed finance in your core business. And the cherry on the cake is you don't have to know anything about it because we know about it and we deliver it as a service. So why wait?
Yeah.
Makes full sense.
If I can chip in, I think what I really like about the Tricount example is that it's a very natural extension of the core that the application is offering, right? It was all about sharing expenses and tracking, who owes what to whom. But the natural extension of then settling it wasn't there. And with open banking and with this partnership, we've been able to really add value to what was already a great experience. And I think a lot of other use cases are out there, whether it's linked to offering a facility of payment, whether it's linked to increasing loyalty, or whether it's just enhancing the user experience. There's going to be a lot of that possible with a lot of facility, as Kim has explained. And that's what's really nice about the area that we're working with, where all of these things become possible, leveraging a very strong infrastructure and a very strong regulation. That's what, BAS and open banking make possible now.
Very well said.
Users are really demanding of simple and seamless journeys. And that's really what we could observe with this project. As Kim said, we have also have a young consumer base, 18-35, a bit more, but you can see the people are not scared of relying on third-party services when they are in Tricount. And there is a demand for instance, for more and more, like in Spain, we are getting big, and there is a demand to integrate with a Spanish local player also. So you can see there is a demand from the consumer to find solution to make their life easier. And when it's brands they trust, it's a good news to see them working together. Like for Tricount, for instance, they know Tricount, and ultimately the payment will be processed by their bank, which is familiar to them as well. So there is no kind of who is handling my money. They know it's in control. They trust the parties, and that's indeed a natural flow for them. It just makes their life easier, but they don't see an extra risk because they know all stakeholders.
Very, very well said there. I think that kind of covers a lot of that there, especially around this this partnership, which seems to be a bit of a flagship case study for banking as a service. Well, that's kind of all we've got time for today on the FF Arena. Thank you all so much to my panelists. First of all, Kim, where can we find out more about yourself? Where's best to connect?
On internet. just Google us, myself, our company, and you will find it out there.
I love that. Nice. Now, Mastercard, Henri, is there a good place to find out about you guys?
Well, I would encourage anybody to reach out to me directly if they're interested in these services. You can find me on LinkedIn, and that usually works. It's been a channel where a lot of fintechs have contacted us to find out about what we can do to help them and to help them grow and to offer payment services.
Excellent. And Jonathan, what about where best to find out more about you and of course at Tricount?
Yeah, the best is on the App Store or the Google Play. So yeah, you should download the app ASAP, and then to also LinkedIn and stuff for other subjects. But yeah, our really touch point is the app or tricount.com.
Perfect. Excellent. Well, I've been your host, Ali Patterson. Thank you all so much.
Thank you, Ali.
Thank you.
Thank you.